This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Joe Edgar, founder of TenantCloud. TenantCloud is a cloud-based property management system which allows you to manage up to 75 units for free, accept and manage rental applications, store accounting, collect and track rent, manage visual maintenance requests, and get a personal listing website, and much more. Joe, thank you for joining us.
Oh, my pleasure, Hall. Thanks for having me.
Great. So what was your background before founding TenantCloud?
I did have a bit of a real estate background. I bought my first investment property. I was about 14, grew up in Southern Oregon on a little reservation. And so, my father swung a hammer and my mother was a janitor, and they had 13 kids. So we were the labor force. So I definitely got my hands dirty in the real estate space, from everything from, fixing toilets to building foundations, doing electrical and roofing to, mopping floors and, what have you around the space. So I definitely did that, went to school, and really came into it from the venture capital side. As I went to school, I ended up in Texas with Governor Perry. And at the time, I'm sure you remember the Texas, the Technology Fund. So that was managed at the governor's office. And so I went in solely with a mission kind of to kill that fund, but ended up running a few funds out of the governor's office before we put that thing to bed. And then around that time, the President Obama had created another program that really didn't have any rules. And so it allowed me kind of a white paper, if you will, to create something very new. And that was in the venture capital space. And so just doing that and being part of venture capital and trying to manage a lot while I had rentals, I stumbled upon this problem that exists in the marketplace.
So what led you to start work on this particular problem?
I was really doing my MBA in New York, and I had properties at that time, mostly in Oregon, but here in Texas and some in southern Utah and Arizona area. And just trying to balance all of them. I mean, it's really hard to travel and see all these properties. And so, as I moved around, I left Oregon, I moved all my properties to a property management company. So that's pretty normal. You have a property manager, they'll charge you 50% when they place a tenant, or 100% of first month's rent when they place a tenant. And then anywhere between 30 to 50% of, gross rents. And then they'll mark up, any maintenance they do, 10 to 20%. So it's pretty standard. It's everywhere out there. So in cities that I couldn't be, then that's what I'd use. I'd use a property manager. But while I was in school, I got snagged in a couple of problems where we had to kind of fire the property managers. And in doing that, I had to find a way to manage them while, still going to school and doing a lot of other things. And so just having that issue, I'm like, man, I can't be the only one that has this. And so as I looked into the problem, I was very aware with the top property management software solutions that were available for property management companies, but nothing really for me that's kind of like a DIY. And so thinking myself was, just a pariah or an outlier. I didn't think too much of it until I dug in and I found out there are 15 million people just like me. It's one of the largest SMEs in the country, not to mention the world. And they manage 23 million rentals, and they house 63 million tenants. And so that's really what ultimately said, I gotta dig more into this, because I'm not the only one with this problem.
Great. So what's your advice for people investing in this space? What do you tell them to do before they write that first check?
What's nice about this space is everybody in one way or another touches real estate. So it is one where, after 2008 hit, there was sort of a slap in the face whiplash where nobody wanted to even hear the word real estate, nonetheless write a check to a startup that was trying to do tech for real estate. but everybody had touched real estate. And so what's nice among all the other technologies that are out there, this is one that a lot of people do, a lot of people relate to. So especially on this, now that it's hot and out there, but I do just tell any investors who are looking, definitely, venture out, learn, what the company's doing, and you'll find really fast how you can do it. And, get in there and support them by, even if you're only going to write a small check, definitely get involved in the early phases.
Well, let's talk about the state of the sector itself. How is the industry evolving post-COVID? Where is it going from here?
Yeah, COVID really helped the industry as a whole for real estate tech, and mostly it's because a lot of people, like I said, they were avoiding it for a long time, and then when your entire platform is designed to help landlords be remote, when COVID happened, they have to be remote, and all of a sudden you're there to solve that problem. So a lot of people went online that would have taken, many years. And real estate was one of the slowest to adapt to technology. And so that really moved them into kind of a technology platform. And so it's been really good on that front. And you're only going to see it move more and more. I mean, like I said, back in 2018, it got hit really hard. So there was no such thing as real estate tech when we started. And so that was the early part of 2015. I came up with the idea, and we didn't really launch till 2016. And in those times, if you were doing anything in real estate, you were really just out there without an industry specific. You had to really kind of explain it to every investor. And then 2018, you start to see a couple of groups come out looking for things. A lot of those were from Yardi, RealPage, and Zillow acquisitions, where there was some interest starting to spark. And by 2019 and 20 is really when these funds just started popping up. And so you had this real estate tech term and property tech, be realized. And so that's really, helped the industry, if you will, as a whole, just because now there are investors, there are people who focus just on it, and they are realizing just how big it is. Real estate touches everything. There's different types. You have commercial, industrial, residential, you have apartment, condo related, you have retail. Those are just the different segments. And then you break those into it, and you have, smart devices, you have materials that you're going to buy, you have supply chains, you have contractor issues. Then you have all the money that goes in and out of all those transactions. So you have transactions. And then anytime there's real estate, there's contracts everywhere. So you got legal platforms, processing, and then you just have a lot of people. So then you have these management tools. And so those are all just different segments that are in and around the industry of real estate.
And so how is it growing coming out of COVID? It appears to be doing quite well, but do you have any numbers?
Yeah, I don't know what numbers I can give you. I can really give you just specific about TenantCloud is probably the closest thing we can do. We had in 2018, we brought on a great partner, Keller Williams. Really, it was led by Gary Keller, the founder of Keller Williams. He's both an investor, and we worked with them to kind of build some software. And so that was great. And during the start of COVID, we kind of had ended our direct relationship as we finished the software we were doing for them, and we handed that over. So that was, for us, our first time to go stand out all on our own without, a big partner contract or anything like that. And, so in 2018, we did about $1 million in revenue. 2019, we did just under 3 million. And then last year, we closed at over 6 million. And then, we've just been going from that. So, this year we're probably going to push around the 12 million mark. And so, COVID has definitely helped educate those. What's been very fortunate about our company is we really haven't raised that much money. And a lot of that is because, we've been savvy, but it's the cost savings is directly related to our marketing. We don't do much marketing. We've been very fortunate in how that grows. And so, as an industry as a whole, to kind of get to that point to where there's a name that exists out there that's growing fast enough is a lot in regards to, eyeballs looking for it. And so it's always good to be a product where people are looking for it because it saves you on marketing costs.
So what are the challenges in the space today?
That's still a challenge. Even to say we have a lot of users coming in, there's still the challenge of the CAC. The cost of acquiring a customer, it's a very fragmented market. There's 15 million of them. Less than 1 million right now use a software solution. And so that's definitely one still getting out there. You want to be visible above all your competitors, but as a market, we really want to just knock it out of the park. And there's still some challenges there to get in front of the users. There's also the challenge. Our space is fairly new as a fintech, industry, if you will. And when I say that, I mean, our competitive space, we are specifically focused on the smaller single family rentals. And so all of our competitors, that's really our sweet spot. And so when you say property management software, there's those that are after the multifamily, which is Yardi, RealPage, AppFolio, Buildium. And then there are those who are just after the single family rentals. And we're a much smaller group just because it is a fragmented DIY space. And payments and a lot of that stuff is just so brand new. We've had to invent that entire market. And so, in doing that kind of payment, you can see a company like ours, it doesn't take long to be doing over $1 billion in payments. And so when you move that kind of money in those large transactions versus an e-commerce site that maybe sells $20, $30 a user, our average is $1,200 because it's rent. And so we deal with a tremendous amount of fraud, and you really have to build those tools in because there aren't other companies out there able to help you. And so I know we've even talked about this, and you put together a conference where we talked about this in the past, which just about the fraud that exists in this. And so we've really had to be our entire space. As far as our competitors, we actually all got together, and I think you were, now that I remember, Hall, you were part of that. So we tried getting together at one time to even see if we could leverage a platform, and that didn't end up working out. But we did get together to kind of share on best practices and fraudulent bad actors, and just ways that we could address fraud, just leading an industry. So that's definitely another hurdle is cost to acquire a customer, and then just being able to lead and manage the amount of fraud that's in this industry.
So how does TenantCloud fit into the overall landscape? You talked about some of the other competitors, but can you describe it in more detail about where you fit in the landscape and what exactly you do that's different?
Yeah, for sure. So to give a little sense of the landscape that is out there, there aren't many of us left. It has been a wild ride on the deeper financing side over the last 12 months. But we had a competitor on the West Coast that had raised 20 million, Cozy. They're really just do background checks, and they help you list a property. So if you are looking for a tenant, then it's great. You can put your property on the site, list it, and that would send it out to lots of syndicating partners like a Zillow or a Realtor.com or Apartment List, and get it out there, and then help you find a tenant. And then when the tenant sends an application, you could charge a background check. So that is our a service that's out there that was really Cozy. They'd raised 20. Then you come in and you have Turbo Tenant. They've raised about 10 million, and they do basically the same thing. They just we're a little slower to put some of it together. But they've now raised some funds to kind of put that together. And then you go in a little farther into Salt Lake, you had Rentler. And Rentler was doing the same exact thing. They just had on top of it that they would list the properties on their own site as well. And so they had their own listing service. And then you go into Chicago, and they would do that, and then also have some basic payments that can go on top of there, and some lease agreements. And so then you go down to us in Texas, and what we were is a full end-to-end solution. And so not only do we do everything I just talked about by our competitors, but we have a tenant, a service professional, an owner, if it's a property manager, and then a property manager or a landlord portal. So each one's unique and different. There's a native app for both iOS and Android. And not only do we allow them to sign their lease agreement, to look for rentals, to find each other, to communicate, to send maintenance requests with a picture and a video, but then by networking them all together, we make the accounting automated. And by automating accounting, it means if you're a DIY landlord, you may get something from your tenant, you hit, find a pro, and you can find lots of service professionals, schedule them. The tenant and the service professional are now going to talk to each other, and you can have access to all the communication, but they're not going to bother you. They're going to figure out the best time they're going to fix it. He sends you an invoice. Tenant shows that the picture, it's fixed. You pay it right there. And you don't have to keep track of any of that accounting. At the end of the year, you want your Schedule E, you just hit a button and it produces a Schedule E for you. And then the tenant, they set up a lease, they sign it, and automatically invoices them every month. It manages all the late fees automatically. So having a solution that is full end to end and really helps make rental accounting and management easy is really important. It's been where we kind of differentiate ourselves. And so there's product that is out there that's very different. But where we really stand different is all of our competitors have raised at least 10 million. We've only raised about 2. We hit break even about 12 months ago. And we've been net positive ever since then. It's really about how we go after our customers. We have a very unique cycle of how we bring our customers offerings and how we bring them different leads and really to lower the cost of bringing a customer. But what's even bigger in that market is now Cozy got acquired by CoStar. The brand's almost gone. So that happened about 1.5 years ago. Avail just got acquired by Realtor.com. So Cozy's was at about an 11x multiple on revenue. Avail was just over 12x. And that was just at the end of last year. And so there aren't many. And then we acquired Rentler about 2 years ago. And so now there's really just 2 of us left in this small fragmented space. And so you can imagine what's been going on. It's been crazy offers, private equity firms coming everywhere. So we're about to close a new round of financing, of which we're going to be wrapped into it is another acquisition of ours that should close this Friday, but put the whole transaction at well over 110 million. But that's kind of the changes that have happened kind of in our industry segment.
Well, that's great. Sound like you're doing quite well with it, and congratulations on that. In the last few minutes that we have here, what else should we cover that we haven't?
I think there's, definitely some interesting things happening in the market that are worth, noting about. I write in Forbes. I write a monthly piece in there, and I just barely published that one. And fun pieces are just what's happening in single family rentals as a whole. I mean, the industry has just gone crazy. I started off saying I live in Austin. 10 years ago, I moved into this and all the houses were around $250,000. And we thought that was outrageous at the time. And, our neighbor just sold their house at $1 million at $40,000 over asking in 4 days. It's like the market is crazy. And that's happening, everywhere. So single family rentals are huge. And then with that, Freddie Mac put out an analysis that they say there's about 3.8 million, home shortage in the market right now. And so it's probably not going to be, anytime soon that you see those prices go down, and the cost of building is only going up. So, it's just a great time to be in and around, DIY single family rentals. It's just going to hold strong. And then on the other side, you see the market change for venture capital. I know, when you change interest rates, private equity firms, because they partially use debt, they adapt faster than venture capital, which don't use any debt. They just raise funds. And so, they're a little more lagged. But what's unique is, I think, back in my day, I helped with U.S. Treasury when they came out with the SSBCI, which is a venture capital program that was a total of $1.5 billion for all 50 states. And they have recently just refunded that. So this is part of the last round of funding that came out of the White House. And this one has slated $10 billion for venture capital. So as much as you see prices on startups that are, focused on the real estate space increase by large multiples, you see single family rentals themselves actually increase by vast multiples. But now you see there's quite a bit of funding to, take us into the future. And so it does, it's out there. There will be a tremendous amount of growth in real estate tech and, real estate itself and all around that, is just going to be substantial. It's kind of an interesting segment to watch, and it definitely will be interesting over the next couple of years.
Well, that's a great place to be. It sounds like everything is bright for the future there. How best for listeners to get back in touch with you?
Yeah, you can just find me. I'm on Twitter. So easily direct message me, and I respond pretty fast, but pretty accessible.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Awesome. Thanks, all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.